Hello, everyone. My name is Javon Foster, the founder of J&D Trading Group. Here today, we're going to be talking about how to enter on a break and retest. First, what I want to start with is looking at a few candlestick patterns, and these are my favorite candlestick patterns. There are definitely more than these three different type of candlestick patterns, but I'm just going to focus on these three because these are the ones I look for when I trade. But I will be providing you with a document of many different candlestick patterns that you can take a look at and practice and review and backtest on the chart. Okay. So once again, this training is how to enter on a break and retest. The first candlestick pattern I want to talk about is the morning star doji, right? And that's basically when price, is we have a break and retest and price retest and it hit that structure. There is the support, right? You would get a strong sell candle, and then after that, you're going to receive a weak bearish sell candle. After that weak bearish sell candle, you're supposed to see another. You're supposed to get a bullish engulfing candle, right? But that bullish engulfing candle, it has to be larger. It has to be larger than 50% of the first sell candle or the second sell candle to the left. Okay, so this bullish engulfing candle has to be stronger or bigger than or not just bigger but closed more than 50% of the second bearish candle. So in this example, you see that we have this bearish candle, then we have this weak bear candle, and then after that we have the bullish engulfing, which closed more than 50%, which is that black line of this candle over here. Okay, and this is just the buy example, and over here is the sell example. The same thing. In this case, we have a strong bullish candle, but then a weak bullish candle. This is called a doji candle, right? These are called doji candle. I believe this one's called a graveyard, and this one is called a doji morning, and this one's called a graveyard, I believe. But it's the same concept. The sell candle must be bigger than 50% of the second candle to that left over there, right? Even if it's not bigger than this candle to the left, but it has to be more than 50% of that candle. Okay. That's an even star doji. Second, we have an engulfing candle, which I was speaking on just now. So an engulfing candle is very simple. An engulfing candle just means that it's just a candle that is bigger than the previous candle and going the opposite direction, right? So as we can see here, we have a sell candle. Sell candles in the previous training, as we mentioned, sell candles mean that price is going down. So an engulfing candle will be a candle that's bigger than the bigger than the previous candle, going the opposite direction, right? So let's look at that over here. Delete this. So as we can see here, we have a sell candle, right? This red candle, which means the price is going down. And then right after that, we have another candle that's bigger than this sell candle, going the opposite direction. That is an engulfing candle. Okay. Try to make it simple for everyone. So it's the same thing for when we're looking for this is a buy example. It's the same thing when we're looking for the sell example, right? This is a bullish candle, which means that price is going up. This blue candle, it means that price is going up, right? It means that price is going up, but the engulfing candle is a candle that's going the opposite direction, which is down, and is bigger than that previous candle, right? This candle is going up, this blue candle, and the engulfing candle, this one was going down, and is bigger than this previous candle. This sell candle is now an engulfing candle. And over here, this blue candle is called an engulfing candle, okay? Next, right? Next, we have the 3 soldier candlestick pattern. I believe that's the name. Please forgive me if I'm wrong. But What I usually look for when I see a candlestick pattern like this, the first one is usually the smallest, and the others they get bigger as they go, or they could be equal in size, but it has to be bigger than that previous candle, right? If we get a strong engulf, strong sell candle, when we're looking for the buy position, we have to get three candles that close, right? The third candle must close above that. Um, the third candle must close right above that sell candle to the left, right? Close above that red candle. So it's the same. It's the same thing when we're looking for. It's the same thing when we're looking for the sell, right? And I drew this one a little bit different. As you can see, we have a smaller um, bullish candle here, and then right after that we have a bigger sell candle, which is also an engulfing candle, right? But what happened is that this candle is so small, even though this one is bigger and it's an engulfing, that's not an indication that the sellers have control. So in a situation like this, we still would like to see the three candles, right? And it still comes above that. Now it's going to be the second candle, right? Come above that, and that will be candlestick pattern, right? For reversal, that's your indication for reversal to now look to take the trade lower. This will be indication for that reversal to now look to take the trade higher, vice versa. All of these. Okay. Before we even get to that, I wanted to show you guys something. Let's look at this. This is a chart, candlestick pattern chart. So I will be providing this to everyone in the group chat and in the training materials. So you're gonna have this candlestick pattern chart where you can actually review and practice on the actual chart yourself. So as you can see, we have different candlestick pattern, inverted hammer, um, Pearson line, the three white soldiers. That's what I was talking about just now. I said winter, but there's three white soldiers. Sorry. And then we have the even doji, which I just shown, and then the morning doji star. So then we have different. They don't have engulfing candles on this one, but you have the other ones, right? So those are these three, right? So this is three. So these are the three candlestick patterns that I like when I'm looking at a break and retest. As I've shown you guys, there's many more, but these are the three that I focus on. Right now, I'm not big, right? A lot of individuals look to enter based on the candlestick pattern at that at the structure, the support and resistance, right? But I'm not big on entering there, guys. I'm more looking to enter based on structure with the candlesticks, right? So what I mean by that, as price retesting, it tends to create highs and lows in the market. And it could be on a smaller time frame. So if I'm looking at a retest on the hour, I can go in the 15 or the 5 minute and see the highs and lows, right? And with those candlestick pattern, I would like to see price breaking highs and lows for me to enter, right? Creating new higher highs and higher lows, right? So this is where I mostly focus on, and I incorporate the candlestick patterns with these, right? So we're actually gonna go over. We're actually gonna look at the real life chart now and see if we could spot any of these patterns at entry areas. Okay. Let's go. So let's look over here. I had this marked up from earlier. Let's see. If we to look over here, guys, right? So we have this structure here, this yellow box. And as we can see, when price broke through, right, it retested. Look at that, price came and retest. Now, as a retest, right, you're able to see the different type of candlestick pattern. So what we have here is an engulfing candlestick pattern. So what that means, we have that bullish candle, and then we have right after it, right? Use the arrow instead. We have this bullish candle, which means our price is going upwards, right? And then right after we have a sell candle, price going the opposite direction, right? And the sell candle, as we can see, this is the beginning of that bullish candle is bigger, right? The sell candle is bigger than that bullish candle. this is an engulfing candle, guys, right? This black candle within these two candles are an engulfing candle, right? That's an engulfing candle, and that is where you could start looking to enter trade to take it down. Now, where do I incorporate structure into this? So now, as we look at this chart, guys, we under 1 hour time frame, but we're going to small time frame. You can see a little more clear. But as we look at the chart, you start to see this was a very low point. Price pushed up, and then it gave us another low point right here. Right when we look at the sell candle, which is the black candles, right? Price came here and then it pushed down here again, another low point, right? And then price pushed up. So as we can see, if we were to draw a line there, support resistance line, let me just make it a little cleaner. If we were to draw a line right there, the black line, and I'm actually going to make it green, make it a bright green. We can see that there's engulfing candle. Not only is it bigger, right? Not only does engulfing candle is bigger than that blue candle right here, but it closed below that green line, right? It broke that structure. So that and that means that it created a new it created a lower it broke that low and created a lower low, right? So that would be a confirmation for me to enter and take this trade. Right? This is an example of using an engulfing candle and incorporate looking at structure and incorporate the candlestick pattern, right? A reversal candlestick pattern to enter. Right. Now, one thing I want you guys to understand, these candlestick patterns, you never want to use them in the middle of the chart. You always want to use them when you're looking for a break and retest, right? Never just because as price is going down, you're probably gonna see different candlestick patterns, but that don't mean you should take that trade, right? It just that's just the market going up and down, playing with your emotion. We look for candlestick patterns at structure at a break and retest area. Okay, let's see if we could find any more. Okay, I had this one over here. So look over here, we have that 3 candle, that winter soldier candle right here, right? The 3 bullish candles. So as we can see, if we look at, you see that we have this black candle with this example, guys. Let's go back to up here. This example is right here, the 3 soldier candle stick pattern, right? So as we can see, look what happened here. We came to a structure, right? We came to a structure over here. And we could see that when it came to that structure, we had 3 candles, 1, 2, 3, right? Not only is it bigger, right? Not only if we once again we look at structure, we have highs, lows, right? Some highs here, lows, high, low, high right here, low. So we can start spotting these structure areas, right? Support and resistance. So as we can see, we have 3 candle, 1, 2, 3. Not only did it breaks above this high right here, right? But it also can't break above this high over here. So this was a strong confirmation that price wanted to go. This was a strong confirmation that price wanted to go high, right? Personally, would I enter at the very top here? No, I would not. And if you watch my Smart Money 102 training, it actually explains how to enter off those candlesticks, right? But that is where you enter. Stop loss will be at that low if you were to enter something like that, and you take a trade based on where your analysis of where price may go, right? Watching the 3 candle the 3 candlestick entries on the Smart Money 102 series, right? You will learn how you can enter price at a discount or premium, right? Where banks are are entering the market for price to start exploding. Okay. Let's see if we can find more examples, right? Anywhere price is breaking and retest, it's a good area. So actually, we're gonna take it on a smaller time frame because a small time frame is a little bit better. We're in the hour time frame, so we'll look on a smaller time frame, real life. examples. Anywhere there's a break and a retest, proper break and a retest. Second, okay, this market was trending down really good. Okay, we could look at something like this. Right, this market was breaking a retest on over here. Let's look at that. I want to find a proper one. I don't want it to be sloppy. So look at this, right? So in this example, and we're on the 15-minute time frame, we had an engulfing candle here, right? As we can see, we have these two candles, right? And then we have a bearish candle, and then we have this weak bearish candle, which is a doji candle, right? That was the example I shown you. And then right after that doji candle, we end up with this strong bullish candle, this blue one, right? That right there. Sorry, I got someone's knocking my door. 1 second. Okay. So that right there, guys, this is that candlestick pattern I was mentioning. I believe that, what is that? The morning star, right? Bad with the names. Right. So that would be a candlestick pattern, and your entry will be right here, and stop loss will be at the wick, right, of that weak candle. As you can see, price went a little bit negative, but played out correctly, and you made a lot of profit, right? You made a lot of profit. You only risked 7 pips, right? That was a candlestick entry. Personally, the things that I would have entered off this candle instead, this one right here, right? The reason why I would enter there, because I'm looking at structure. So we have a high, we have a low point, right? This is a candlestick pattern, but then we have this low here, which is a higher low. And then we have this engulfing candle, which is that last blue candle, bigger than that one. This is where I would have entered. As you can see, I wouldn't even have any drawdown. That would have been just 6 pips pure profit. Also, which you can also spot is that after this bear run here, this black candle, which is represent for the red candle, as you can see, we have 3 candles right after that, right? Bullish power. That's an indication as well for you can enter that. So you had many opportunities you could say, and that would also go at the wick of this candle. So that would have been an 8 pip trade, and you had many opportunity you could have entered off this trade, guys. Many opportunity. Right? Me personally, I would have entered off this second blue candle, right? This would have been my entry right there. Because there's examples like this where you get an engulfing candle, but market is still selling, right? So this is why, guys, it's important to incorporate structure, right? We look at highs and lows in the market, right? Before we can before we decide to enter. So once I see that this black line got broken, this black candle got broken, right? The next candle is bigger than it going the opposite direction, engulfing. I knew that high got broken, and we created a higher high. Not only that, we had a higher low, right? And that's when I would look to take that trade, right? Incorporate candlestick pattern with structure, right? Those are some buy examples. See if I could spot some sell. The market over here look a little sloppy. I want to just find something very clean and neat. All right, I just want to look for something very clean for you guys. I don't want to give you guys just anything. So look at this as well. Let's look at this here. So you can say price is breaking a retest in there, right? Once again, in this case, we didn't have too much of a we had a candlestick pattern here. Over here you can see we had the engulfing. Once it hit that low, we had an engulfing candle, right? And once again, a lot of people look to enter off engulfing candles at these areas. I personally don't trade that, right? I look for structure, so I'm looking for the high. Wherever that blue candle start right there, that's the low to up here, right? And then I'm looking for the high. I mean, that was the high, those wicks. Then we come down to the low, right? So we know this is the previous high, right? So that's the high we need to be broken. that need to be broken unless we created a new higher, lower high. So as we can see, price came up to here, right? Which is around that same area where that wick is at. And then price came down here. So now price, this low right here, right, is low, is higher than this low. So that's giving me a higher low, right? Price is doing that. It's giving me a higher low. Give me a higher low right here, right? So with that being said, since that's giving me a higher low, my next move is to wait for that previous high to be broken, which would be here. So once that previous high is broken, at that point, I would look me personally, I would look to enter, right? Off that break, I'll look to enter, and stop loss will be a little bit lower than that low, right? I don't like putting right to the wick. I like putting, give it a little, like a pip or two breathing space. In this situation, we see that price push down a little bit lower. Once again, this is 8 pips, not a big stop loss. And price took off from there, right? It gave you over 30 pips straight up to that high before we even see a major pullback, right? And price actually can continue going up over 40 pips. So this would have been an entry I would have took. Now after, once again, you see this so this is still following the lower the higher low. One of the things that you notice here after that strong bear run right here, right? We have, let me just zoom in a little bit. After that strong bear run right here, right? This black candle right here. You can see that we have 3 candles. So the bear run and then 3 candles after 1, 2, 3. That's the Winter Soldier or whatever it's called candle. And once again, that's another area where you can also look to enter. Stop loss go at the bottom of that 3rd candle. You need to go low. A lot of people, they stop loss down here and stuff. You just got to go bottom of that 3rd candle, right? That's about 13 pips once again. And look at that. This one had no drawdown, clean, right? It's just a later entry. And don't worry about having a later entry as long you have, as long you get into an entry that gives you confidence that price is going to go the direction that you expect it to go based on your analysis, you're okay, right? A lot of people focus too much on having that perfect entry, having like 5 pip, 2 pip stop loss. That don't really matter, right? The goal is to win. You know, and everyone have their different trading style, I guess. Let's see if we could find you a nice, some of these just consolidating over here. Okay, let's look over here. So yeah, this is an example. This is why structure matter, guys, because this is an example of entering a break and retest, but the market looked disgusting. So how would you have entered over here, right? We can see this. It's a beautiful example. So as we can see, we have highs and lows in this market, right, like that. But within just this area alone, this leg right here, right, we have highs and lows, highs, lows, and highs, right? It may look confusing, but you can even bring this on a smaller time frame, guys, at a 5-minute, right, where you can have a better, even clearer understanding. So based on this, we can see that this is an area, right, that price needs to break. So this is an example where we didn't have really much of I wouldn't say just a candlestick pattern, but we had a strong sell candle, right? And it broke the structure. This is where I will look to enter a trade, right? And then stop loss will be right above those wick 8 pips, and I will take that trade down, right? Wait for that breakout right there. This is and this is why I focus more on structure, because the market is not going to be perfect, right? But if you have the structure down packed, right? If you have the structure down packed, trading become a little more easier. It's a little more cleaner, right? Like if I was to make it into a line chart, let me see something. Right. So let's look at this in the line chart, right? In the line chart way. Right? In the line chart, you see how my thing was accurate. In the line chart, you can see the ups, highs, and lows. Look at that, highs, lows, right? And we could agree that this was the previous high and low coming across here. So we need price to break this area, which is what I was mentioning right there. So we go back to regular candles. We can see that it's this candle right there that broke it. That's black candle. That's your entry. stop losses above those wicks, take that trade down, right? That would have been a 8 pip stop loss. But once again, this dropped over 100 pips, guys. Look at that. Clean, easy, 1, 2, 3, right? Off the 15-minute time frame. Like you could have been done for the month, for the week, whatever, of that trade. So that's how we enter off a break and retest, guys. Let's see if we have any real life example from earlier. So this trade, we hit our target. It went very close to our 40 pip. We went like 30 pips, pull back down. This market is overall bearish, but I was trying to catch a quick few pips in this market. So this is not an example. Let's see. I know we won US 30 earlier. Yeah, so US 30, we traded this earlier, caught 100 pips. We caught this drop over here. So the best way to explain, so we caught an entry over here for US 30, right? And right, this black candle, we entered off this engulfing candle, right? That was our entry off right here, right? As we can see, price came under. We have this blue, we have these bullish candle, right? The blue ones, and then right after we have a strong bearish engulfing candle. So we enter off that black candle right there, right? That was our entry. Stop loss was literally, price came very close, right? Stop loss was literally that wick. And the reason why I entered this candle, right? Because it broke down the lows over here, right? But stop loss, that was stop loss was the wick of that blue candle. So price did come very close, but it actually respected the structure and then break it, and then price tanked 1,000 pips, sorry, 1,000 pips, which was $100 per 0.01 for US 30. So we caught this move this morning and told my team if they held it, price, how far price was going to go, and it hit that area over 2,000 pips. So yeah, those are some quick examples, guys, of how to enter on a break and retest. Right, we look at the structure, and then we incorporate the candlestick patterns to it. Thank you guys for your time. If you guys have any questions, feel free to schedule a one-to-one with me, and we can actually go in depth with this. So you can increase your understanding, your knowledge when it comes to trading, so you can be financially independent. Once again, thank you guys for your time. Have a good day.